Afternoon all. Another week, another interesting change. Everybody now getting a bit more hopeful and a bit more positive, albeit with being a bit conservative as well. I'm just going to take everybody through a quick sort of summary of what we're seeing this week, and then I'll hand over to Nick and Mariana, who are actually dealing with the stuff that's more important at the moment, which is JobKeeper. So in terms of what we've been seeing, there's obviously a bit of a change going through in our industry that we're seeing, which is people starting to look at JobKeeper as a part of a strategic plan and developing that into the next phase of their operation in terms of how they can resuscitate their business as things loosen up over the next 3 to 4 weeks, hopefully, and then beyond, particularly with those businesses which are largely in hibernation mode now. There are some businesses that we're also getting contacted by, like travel and transport businesses around the travel industry, which are now hitting the reality that they don't know how long this is going to go on for and are looking at alternatives that to explore so that they can at least consider all the options available. Basically, the things there haven't changed really from last week. We're all at the same issue. We're just working through them different ways with different clients. Social distancing, I think everybody can now see that it is going to be in and around for a while. We're going to have an app to govern to make sure that we're not, to know where we are, and everybody is dealing with whether they want that or not. I think the download levels from talking to a couple of the people that I know are reflective of the people who are out and about and doing things. And that will probably grow as more people move outside the home. There's definitely been, for us, there's definitely been an increase in queries and questions this week around how people can do things and what structures they can strike with potential purchases or sale of things and bank facilities. And there are also other people looking at how they change their business system. So our level of work has probably gone up 25 to 30% in the source of a week, as everybody starts to come back and start considering all those issues at a bit more practical level. There are obviously some pressure coming on retail. Our understanding from talking to a few people in the industry is that a lot of the major retail stores, including Premier, Myer, and a few of the other larger groups, are looking at the 11th of May as a date to reopen and go back to somewhat normal trading. I think that will drag a few of the smaller retailers along, but I would expect that we might have a scenario which will be a little bit back to the future, where smaller retail sites, even in Westfield, will be manned by one person. So we may have the 5-minute "I've gone to the toilet" block on the front door on the front of the door, also a lunch break, and all of those things. So it may well be an interesting way as things gradually wind back up. And retail are really concerned around how everybody's buying patterns have changed and whether anybody will be actually buying anything before spring and summer being September. So there will be some sales, I reckon, and great opportunities, but whether anybody's willing to open their wallets, we will have to wait and see. And that's pretty much where we are. The interesting thing tomorrow will be Virgin and see whether there's an attempt to roll the current administrators and see where they're up to. Obviously, some of the feedback we have around that is that each of the parties or major parties involved are taking their own advice, including the unions, the larger bondholders, and then there's the finance parties who finance bits of planes. We understand there has been potential threats for people to pull engines off certain planes, which will obviously mean they can't be used if there is an arrangement put in place. So it will be an interesting dogfight, probably, see how that goes, and that'll play over the next few weeks as things continue to work forward through that process. Other than that, I think that's pretty much us. I'll hand over to Nick, who's probably been involved in more fights than we have at the moment.
Just a couple of statistics to start with that have just come in. So since the JobKeeper scheme became gathered legislative force and these new JobKeeper dispute provisions came into effect, just reading now, in the first week, the Fair Work Commission has clocked about 120 applications to deal with disputes under the scheme, which essentially means that employees are taking issue with their employers seeking to either stand them down or ask them to work different duties, less hours, or work at different locations. And I'm not surprised by that at all. I think while we're at the start of this JobKeeper regime period, I think there will be more and more disputes, particularly in respect to those people that feel like their employees are misusing the JobKeeper provisions, and also those employees who may have been on JobKeeper for a while, but have subsequently been made redundant, and then they're taking issue with whether or not the stand down was valid. The other interesting stat is there has been over 300 responses to this union-run job scammer website, which is essentially encouraging employees to dob in, dodgy employers that are misusing JobKeeper. And there's been some live examples of, alleged rorts of the system, employers that are making employee participation conditional upon doing certain things or working certain hours, or, sharing the JobKeeper subsidy with their employer. So I do think there will be more disputes, which just means that it's so important to get right the processes. So I might just deal with those briefly. It's a very detailed topic, but I might just touch on essentially the fundamentals. So pre-JobKeeper, there is a regime in the Fair Work Act which enables employers to stand down employees without pay. And I expect and have already seen a lot of disputes now starting in relation to pre-JobKeeper stand downs. I've got one at the moment that I'm dealing with that's in the Commission. And there's a lot of ambiguity still about whether or not employers have a lawful basis to stand down staff. And the reason is the relevant section of the Act has never really been tested in the context of the pandemic. The word unprecedented is being thrown around probably too much, but in the context of a section of the Act that really wasn't designed to deal with this, it's definitely not black and white. Unless you're a business that has been shut down and you simply have no work for your staff to do, if you are standing down staff because of deteriorating business conditions, it really is a grey area, and there has yet to be a decision of the Commission that deals with COVID-19 and the ability of an employer to stand down staff. Which brings me to the second topic, which is alternatives to stand down. The reason for alternatives, because stand down is contentious and untested, a lot of organisations are looking at alternatives to stand down. So alternatives would look like agreements with employees to do things like reducing remuneration, commencing a period of leave without pay, which is different to a stand down, as well as agreements with employees to work different duties or lesser hours. The key term there is agreement. All of these provisions, including the new JobKeeper provisions, do not prevent parties from reaching agreements with each other by consent. And as an organisation, if you're able to do that, you're automatically going to put yourself in a stronger position, because you're going to have buy-in from your staff. The communication presumably will be one which invites the employees to express their views and to consent. And it avoids a lot of these difficult arguments about whether or not you had a lawful basis to issue a direction, which is really a one-sided direction from an employer. Some caution definitely needs to be exercised. You could not reach an agreement which is otherwise unlawful. So to give you an example, if you've got employees that are award related, that have underlying minimum award rates that you need to meet, you could never reach an agreement to drop salary to a level which was below the underlying award rate. Moving to JobKeeper, and Mariana will obviously talk in a bit more detail about the actual payment scheme, but what I think has been lost a little bit in all the media focus on JobKeeper is these new powers that employers have been provided to issue what are known as JobKeeper enabling directions. So importantly, these are powers that are temporary. They only apply during the 6-month JobKeeper period that ends at the end of September. And importantly, only applicable to JobKeeper eligible employers and eligible employees that are actually participating in the scheme. So that would exclude organisations that don't meet the turnover test, so are not participating, but it would also exclude organisations that have elected not to participate. And I've dealt with a couple of matters this week concerning employees that have been made redundant by organisations that probably could have participated in JobKeeper but elected not to. And I guess there's a related issue there about redundancies. I think at the moment, affecting a redundancy if you are JobKeeper eligible has automatically become more difficult. Doesn't mean that you can't do it, but in circumstances where the intention of JobKeeper is to preserve jobs and to enable you to essentially stand down staff and not pay them at all, just simply pass on the JobKeeper payment, I think justifying a genuine redundancy now has just become more difficult. So to the extent your organisation is looking at that, I think you should act carefully and get some advice. With respect to the JobKeeper directions, so the 3 main directions are firstly in relation to stand down. So that can be temporary or full stand down. Unlike the old Fair Work Act provision, which is essentially a full stand down, what these JobKeeper directions enable you to do is stand down an employee to work lesser hours than the usual hours, or a full stand down where they're working no hours. It does need to relate to COVID, but nothing really too difficult about establishing that connection. The other direction is about duties, working alternative duties, and the last one is about location of work. The significant thing about all of these directions is that they basically override any existing contractual or award or enterprise agreement provision that would otherwise prevent you from doing that. And that's actually really important because a lot of the modern awards and enterprise agreements would include, consultation provisions, other provisions that would preclude you from doing this as a direction. So it is a real power and a very favourable power for employers. And what is very important though, and I'm already seeing organisations missing this, is some of the procedural requirements. So there's a requirement to consult before actually issuing a direction. There's a requirement to give notice of intention to give the direction, and you're meant to actually allow 3 days before you give the direction and genuinely consult with employees. It doesn't mean that you have to agree with employees not to do it, but you need to consult, you need to keep written records of consultation. So I think of these 120 disputes that have already been lodged, I expect some of them will relate to just failures to follow these really ticker box procedural requirements, but they're incredibly important. Just to finish with a few recent observations in the last week, obviously there's so much media focus and practitioner focus on this stuff. There's a few recent anecdotes that I'll just run past. One is in relation to Qantas. So this dispute's been going on since Qantas stood down a lot of its staff, about 2/3 of its 30,000 employees. So some of those employees that are currently ill, awaiting surgery, wanted to take sick leave during the stand down period, and Qantas is preventing them from doing that. So that's actually before the federal court, and I think there's a decision expected today. JobKeeper rules to be amended. There was a lot of confusion about this concept of one in, all in, whether or not an employer needed to nominate all of its employees. There was some back and forth between Treasury and the ATO. It's now been decided that the rules that actually underpin the scheme that have legislative force will be amended to emphasise that one in, all in concept. Just on safety, Safe Work Australia, which is the national regulatory body in relation to work health and safety, will be developing COVID-19 specific industry guidance. They've already released earlier this week this set of principles that will govern COVID-19 work health and safety compliance. And what I expect to see is Safe Work Australia taking a pretty active role and probably an enforcement role with respect to those employers that are not complying. So it will focus on things like what employers are doing once these restrictions are being relaxed to ensure safety. So that will mean hygiene measures, social distancing. So clearly there's going to be, a positive obligation enforced on employers to show that they are actively doing things to ensure safety. So it just can't be ignored. It hasn't been the focus yet because everyone's trying to get across JobKeeper. But this is we're going to be in this situation for a while. So I really think there'll be a new wave of safety-related issues. I wanted to mention the tracing app. The Business Council of Australia have already endorsed that. And what I expect to see is a lot of organisations looking to sort of mandate their employees using this app. I'm in the process of looking at that issue personally, whether or not it could be essentially a direction that you issue to your staff as a condition of them returning to work. Obviously, it's very contentious. There's been a lot of sort of civil liberty and privacy issues raised, but I wouldn't be surprised to see bigger organisations starting to make return to work conditional upon participating in the COVID Safe app software. Just another example of a bit of a danger area. There's a big retailer that's in the media about making the JobKeeper payment conditional on their casual staff working more hours. So this is a retailer that has a lot of lower paid, level 1 minimum award rate casuals. And what they are doing is making the JobKeeper payment conditional upon these casuals working more hours than usual to get them up to the equivalent of the $750. Now, there's nothing in the JobKeeper provisions that enable employers to require employees to work more hours. In fact, it's the opposite. It enables them to direct employees to work less hours. So I think anything in the space of requiring employees to work more hours is dangerous. It's going back to agreement, whether you've got agreement. And if you're making any JobKeeper payments conditional on any terms and conditions, I think that's a problem. I'm also seeing organisations that are trying to link, pay reductions with JobKeeper directions. Very importantly, one of the fundamental features of JobKeeper is that you're meeting what's known as the wage condition, which means you can't drop people's hourly rate of pay. So if you're looking at restructuring your organisation, and quite rightly, a lot of organisations are looking at the way in which they pay their staff, whether that's appropriate, whether going forward they're looking at a different structure, and that might include, reducing remuneration. I think that should be a separate exercise, consultation with employees, trying to reach agreement, but not linking them with JobKeeper, because as soon as you do that, I think you put yourself squarely in the eyes of those employees that might want to argue that you're trying to rort the system. That's about it for me. Thank you, Todd.
Thanks, Nick. Some interesting things moving around. It definitely, that retail stuff is going to play out over the next few weeks as everybody does come back to work, and it's going to create another layer of havoc as well. So I'm intrigued to see how that'll work and how many disputes arise. So Mariana, unfortunately you and I have had a lot of conversations around this week, helping some people, and I hope not confusing other people, but can you get into your well-rehearsed sort of update, and we'll go from there.
Yeah, actually I just had an email confirmation for something I was after from the ATO. I'm just looking at it for it now while we're just talking, but I'll go through some of these things and it'll pop up in one of these points. Thanks everyone for joining. I really wanted to talk about the alternative test that's come through, and that sort of came through I think last Friday over the weekend. So what you'll see on the slides is the black stuff is still available, but it's not new. So I've just tried to highlight what is new, and that's what I'll focus on in our conversation. So I'm making an assumption that you all know a little bit more about it than nothing at all. So as you'll recall, you have to have eligible employer, and that is the big question. So you have to have a decline in your turnover or projected turnover of either 15, 30 or 50. Now, if you're a company, don't worry about the 15. That is really for ACNC charities that are registered. So we're really talking about 30% or 50. Now, in most cases, the 50 will be for those global entities that have turnover of greater than $1 billion when you're looking at it globally. So again, my conversation will stay at the 30%, but be aware that that does exist as well. And normally what happens is that you look at your basic tests, and your basic tests, you can do your turnover, your decrease in turnover test over a particular month and compare it to the same month in the prior year. So if you're looking at March 2020, you look at March 2019. Has there been a decrease of 30% or more? Yes or no? March, yes, you're in. And you don't retest, that's over, move on. But it's not as easy as that for all of us. So then you can go, if you don't get March, you look at April month, or you look at the quarter. And what I want to discuss is there's an alternative test if you don't meet the basic test, meaning you don't have a comparative for the month before. And I'll go through that alternative test in the next slide. But just before I get there, it's important that your employees have been paid $1,500 per fortnight per employee. Some people have fortnightly cycles, some have monthly cycles. The ATO says doesn't matter. Normally that's the law. It says every quarter, but fortnight. But for the purposes of practicalities, as long as it's been paid, initially paid by the end of April, now they've extended the top up to the 8th of May, which makes sense, right? Because they've extended the enrolment period to the 31st of May. And they only yesterday, I think the day before, mentioned that they'll extend the top up date, meaning you're assessing to see whether you're in or out. And one of the conditions is if you're in, you have to have paid your employees by the end of April. And it doesn't make sense if you just had the extension to enroll by the end of May, because most people would need to have paid their employees. So that's good news that we've got that extension to the 8th of May now. Next question is, have you got eligible employees? Nothing much has changed there. Employees as at 1 March, Australian citizens, all those kind of things, permanent, part-time, all fine, as long as they're employee at 1 March. The only additional condition is if you've got casuals. The casuals is probably going to be an area, Nick, that I think Nick's going to have some work in, because they look at the 12 months before 1 March. So you go 1 March 2019, look at 12 months, have you got a casual? And it also has to be what is it?
Regular and systematic.
Thank you. Regular and systematic. So the question is what regular and systematic is. And that is defined somewhere, I think, in the Fair Work Act. Is that right, Nick?
Yeah, it's a long-term casual definition in the Fair Work Act. And I think I said on a previous webcast, it's dangerous in that as soon as you deem someone an eligible casual employee for JobKeeper, you're basically deeming them as a regular and systematic casual, which means they might have entitlements to other things like parental leave and flexible work arrangements, and maybe a request to convert to permanent. So it's not as simple. And I think there are consequences of sort of rushing to get a casual in.
Yeah, interesting, right?
Yeah, I saw some commentary on that they the only other place that language is used is in the bullying provisions.
Right.
Yeah,
they're the indicators of what it is. So like they've used they've brought a lot of standard legislation and language from a lot of different places and put it all in one hit.
Right. So so there was a media release just last I think Friday where Josh, our friend, mentioned that full-time students who are 17 years old and younger and who are not financially independent are ineligible for the JobKeeper on prospective basis. So they're not eligible effectively where they're not financially independent. So the next thing, pass eligibility, you have to enroll, and I've mentioned that it got extended to the end of May. But, you know, look, if you want to get your payment at the beginning of May, I think you got to do it before, around the 8th of May at the latest, so you can get your money for April. Now, if you enroll later, you still get your money for April. It's just that you probably wouldn't get it until June, first week in June. You'll get April and May together in June, likely. Use STP upgrade. Yeah, okay. So one thing I wanted to bring out is that you can you have to update your single touch payroll. If you have JobKeeper functionality on your payroll, so your single touch payroll, then it's a really easy exercise at the end of the month. Basically now it's going to be, you've got a bit more time, but once you make the enrolment, you'd upgrade this as well to elect who the employees are, the eligible employees. And as Nick mentioned, one in, all in, and the media release would confirm that, one in, all in. One question we sort of had, which we've gone to the ATO with, well, what happens, you know, if you don't have the money? And the ATO has come back saying, well, we've got an extension now to the 8th of May, and there will be JobKeeper hotlines with, so the ATO will have JobKeeper hotlines with the banks. So now I did talk to our debt advisory, and as of yesterday, I haven't seen that. And I'm not saying it won't come in, but effectively, sorry, that is because it would take 2 or 3 weeks to get that 250 loan. And if you've already got a relationship with the bank, it may take less, but if you haven't, it may take longer. So hence why if you don't pay the money, you don't get it. But you know, it's not so clear. So I was saying with the employees, the eligible employees, you update it through the single touch payroll if you've got JobKeeper functionality. If you don't have JobKeeper functionality or you don't have STP, which you mightn't, that's okay. You do it via the business portal. There'll be an opportunity. Those forms won't come out until about the 4th of May. Now, as I mentioned, the calculating decline in turnover, use a basic, the monthly or quarterly, and in some cases you can use alternative. I want to clarify here that if you have a comparative month, or comparative, so you have a March 2020 to a March 2019, you can't just jump to the alternative test. So once you meet the basic test, you don't keep retesting and seeing if you get other options. But you can't just simply, oh, I'm not in the basic, I'll see if I can fit in with the alternative, unless you meet one of the criteria. Now, the alternative test is the Commissioner's discretion. So the Commissioner has a discretion, but only for certain types of entities. You can't apply for a discretion like you might apply for a public binding ruling and say, this is my situation, would I pass? It doesn't, no, that's a no. It's only if you meet the alternative test, which I'll run through in a minute. So what is projected turnover? If you recall, you could be looking at your quarter 1 April to 30th of June. You'll have to project your income. That's really, I mean, speaking to clients, it's a really hard thing to do in this, who knows what the situation looks like. I mean, the ATO has, and it's got it in his question and answers on the ATO website. And when you go down to, you know, updated dateline, it has a question and answer, and it asks the question, what happens if you do a projected turnover and it's not right, like it exceeds your actual? Well then, you know, you've got to consider there might be consequences, but at the same time, the ATO is saying, well, as long as you can support your claim, you can support how you calculated your projections. So say for someone like a not-for-profit that has to include bequeathments, they obviously wouldn't have calculated that, they didn't know it was coming. That might be reasonable to say that. But when you're in your business, how would you do your projections? Based on what? Is there something that the market says that there's been a drop in your particular product of 20%? Could you do something like that? So yeah, so that is a question of how you do that, and we can assist with discussing those calculations. Next slide, I think I'll just go to, thank you. So alternative test period. Well, when you read these, they're not really complicated, but at the same time, you really just have to focus. So these are the scenarios that the ATO will accept as an alternative. So you commenced your business, you know, after 1 March, if you like, 2019. So there's no comparative for March or no comparative for April. So maybe you started in June last year. Then this, you've got the commencement business. Now, by the way, you can use any of these tests if they fit your bill, but you use the one that the most makes sense. Obviously, a lot of them won't make sense to you, but you might have a commenced business and you might have irregular turnover and substantial increase in turnover. All three might fit your business, but you use the one that best fits. You only use one, obviously the one that works. So the commencement business, there's two tests there, which is interesting. An entity commenced business before 1 March, but after the comparison period in 2019. So it commenced before 1 March 2020, and you can do two tests basically, and this is what was outlined in the explanatory statement, one of the examples, but they've added two tests that you can do, one or the other. And one is that you look at, say your business started in October, you look at all the months, all the income that you received up till, say you're testing March, it's up to February, you divide it by the number of months, and you get effectively a number, your average for the time that you're in business prior to the projected period, prior to March, and you compare that with your test period, which is March. So have you got a downfall of that average versus your March? And if you don't like that, then you can also, if you've already been in existence for 3 months prior to say the test period, say 1 March again, if you're looking at March as the period, you can look at 3 months beforehand and take the average of that. And so the average number you compare of the 3 months prior to March. So you see how it is, it's calculations more than anything and just making sure you get that right. But let me just see if there's anything I wanted to add to that. It only applies to new businesses. So you can't apply this. So I've just, for example, I've got my old business, but I've added more businesses on top. So I've branched out and doing selling a new product or something like that. So this is more of a commencement. There might be another comparative you can use for that. So I think there was something in the explanatory statement that may have been incorrect in the way that they've done the calculation, but I always recommend you follow the legislation anyway. So the other one is acquisitions and disposals. Now, the simplest way to look at this without, obviously, and by the way, with the first one, you could compare quarters as well, April to June, and there's a way of doing that. And with all these, you can compare months or quarters. Now, I'm just keeping it to months because it's probably a little easier to explain whilst I haven't got detailed slides for you to see. So acquisitions and disposal basically is looking at the test period, the test month, so you pick March, and then you go back and say, when was the acquisition or disposal made? And the following month is the month that you take as your comparative. And the same with the restructure. This restructure is more about you're a group. So within your group, you've restructured. So you might have merged two businesses together. Something's changed, different to the acquisition one. Again, it's the month after you've restructured your business, so a whole month, and you look at the numbers and you compare it to the month, the March month. Now remember, you're doing this on an employer basis. So the entity, you're comparing the figures for the entity that has the employees. The ones of interest, I think, for most people are going to be the commencement of business, a substantial increase in turnover, and irregular turnover. So substantial increase in turnover is quite complicated. I've got to say that one out of all of them is a little bit more complex. But really, it's not so clear whether you're, I'm just getting my notes, sorry, because it is a little bit complex, so I just don't want to say the wrong things. It's not quite clear whether you're looking at, you're just looking at, so for example, you're taking the month of April as your test period. It actually says you compare the 12 months before that. So do you compare March, 1 March to March effectively? And you look at those, so you look to see if there's been an increase of more than 50% in that 12 period. And if there has been an increase, you go, okay, now I have to actually test the turnover. How do I do that? Then it's quite complex because then it looks at the April period and it takes 3 months before that and it takes the average. So there's kind of two tests within there. So that one is a little bit complex. So if you do have that one, I would recommend you get us to review it. If you don't meet the 50% turnover, the next question is it 6 months immediately before the test period? So your April test period, you look 6 months before and you compare that month to the test period and immediately before and see if there's been an increase or not. So, you know, it does become quite complicated. So I'm moving quite quick through them because really I don't think without detailed examples you can really do it justice. Irregular turnover. So this is non-cyclical businesses has a regular turnover during a quarter over the 12 months. So it looks at a 12-month period and you break it down into quarters and then you get the highest and lowest, right, increase. And then you say, is there a more than 50% change from one quarter to the next? If there is, tick, you're in, and then you go through the test. Then you go through to test the comparative periods, and the comparative periods work out to be the 3 months before. So it's easy to do the comparatives, you know what you're using, but it's harder to sort of work out whether you've had that change. And non-cyclical would be, for example, where you might have received irregular turnover. So you might have received a grant in one year, say in March 2019, and you never received that grant again in March 2020. So that's what and it's not cyclical, it's just an irregular turnover. So therefore you could use this particular test for that. Another one is a sole trader or a small business. It says here, impact on sole traders, small business that are affected by sickness, injury or leave. If I'm a sole trader and I'm on maternity leave, I'm a lawyer, accountant, I'm on maternity leave last year in comparison, I could probably use this. So I could probably see if my turnover, I would use the month preceding my being on leave. So, you know, see, it is quite interesting the way they've done it, I think. But that is really for small sole traders or small partnerships, being 4 partners. And drought and national disaster. So that one was an example in the explanatory statement. So if we had a drought last year, potentially you can't use the figures, the comparative figures. So they're actually recommending you use the year before. So if they're saying 2019 now, you'd use the 2018 comparative. So that's quite interesting, the way they've done that. And if we move on to the next slide, I think there'll be lots of questions on this one, but I think the only way you can really answer them is by looking at the numbers and looking at the way the calculations have been done. I think those are too risky to just talk over the phone and get the answer. So there has been in that media release policy changes to the JobKeeper, and one thing that we're all happy to see, because a lot of clients use service entities. So some clients have consolidated and tax consolidated entities. Maybe they're not tax consolidated entities, but they have 4 or 5 companies, and they usually use a service entity. So they have all their employees in a service entity, and they charge a fee, management fee, plus a markup. Now, in those cases, it's unlikely that the service entity will have that drop of 30%, unless you've in the business where you've made a lot of people, you know, somehow redundant. And then that's probably a Nick question, because if you could get into the JobKeeper, but after you've made people redundant. So test that one. But effectively, the service entity, we're still waiting for the rules on that. So we haven't received that yet. But what they're looking at doing is they're going to look at the comparison. April, they'll take April for the service entity, look at any entities that pay a management fee, I would imagine, that, you know, use those employees in their business. So you might have 3 or 4 entities, use that income for them as well, bunch it all together for April, and then for 2020, and then compare it to April 2019, the same entities. So like for like, you're comparing. I think that's key in all this, is like for like. Obviously, if you didn't have the service entity, in that, you'll then need one of the other tests to help you out there. There's no registered charities on this call. But I just thought it's interesting, this one, that registered charities can elect to exclude government revenue. So a lot of them do work on government grants. They can have it in or they can have it out, unless of course they're not registered. Charities are ACNC registered, and you know what that means if you're a charity, but it does exclude universities and schools. So they still have to meet the 30% turnover test. So the next slide, please. Yes, this seems all new, doesn't it? No, just the black bit. So call to action, I guess, is make sure you're eligible. If you're going to use one of these alternative tests, I just think you need to bulletproof it and get it reviewed. When you're looking at the decline in value, don't take just G1, because G1 is what's on the BAS, but you need to take off the GST. Normally the G1 has GST. You need to exclude input tax, supplies, interest, dividends, etc. And usually that sits in G1. So, you know, there's a few things that need to be taken out. Also, with talking to the ATO, you know, you sort of ask them about, I've got this scenario where a charity received, so this is a charity, but you can apply the same logic here. A charity received a grant in March 2019. And then the same grant, they didn't receive that again. It didn't come in another month, it just didn't receive it in March 2020. Now, if I just used like for like, if I just use March 2020 with March 2019, because that was what was in my BAS, and I'll just, obviously, I think it's in there, I've taken everything else out, I'd had a 15% or more drop. Now, the ATO has come back saying, you've got to use like for like. So because the grant wasn't there, you didn't get that grant in March 2020, you should exclude it. And, you know, that's would be news to me. It would be news to a lot of people. So it is interesting how this is going to work out going forward once we're all in. We've got the 6 months payment. And remember, it's 19,500 per employee. And if you get 10 employees, that's 195,000. If you've got, you know, 100 employees, it's much more. So, you know, there's a lot of money at stake there. Will you have to pay it back if you got it wrong? Or it's not very clear because the interpretation isn't really there either. It's just because we just happened to ask the ATO now. So that's an interesting one. Completion and submission for relevant forms. As I said, you're enrolling is the last thing. That takes 2 seconds to enroll. So I wouldn't be rushing to it if you haven't calculated your eligible employer requirements first. It's extended to end of March, but I think I'd give myself to the 8th of May. So by the time I need to do my top up, I'd do my enrolment. And that means I would probably likely get my April payment in May. Record keeping for those that are, for your employees, make sure you got employee nominations. Self-assessment, again, you'll probably have a bit more time if they've extended the payment date. I'm sure they've extended that to the 8th of May as well. But the main thing is get it out to your employees, make sure you self-assessment, make sure you've got it on your records. It doesn't have to be necessarily signed, but it has to show that their employees have ticked it off. And that's asking about whether they're being employed from 1 March, whether they're nominating anyone else to be their main employer to get JobKeeper, etc. If you are a business owner that is not an employee, which is likely it could be, you're just getting dividends. If you're not a sole trader, but you work in a company and you're a director and you get just dividends and you're active in your business, then you're eligible for the JobKeeper and you could get the eligible, you just have to complete the business participation nomination form, a bit like an employee. If you're a sole trader, you don't need to complete that. Just to watch out though, you can't be eligible for JobKeeper under business participation nomination if you've got salary and wages somewhere else. So be careful. Update your single touch payroll if your JobKeeper functionality is available. I've said 30th of April, but you know, you can update that by the, what is it, that extended to the end of March. Sorry, that should all read extended to the end of May. So that's been extended as well, but you'd be doing it that at the same time that you do your top-up payment, so it's likely to be 8th of May. I'll change those dates before we send out the slides. If you don't have JobKeeper functionality, which some may not, you go through the business portal, and the forms are going to be available from the 4th of May. If you want to get paid in April, yeah, just make sure you do it by the 8th of May. That's my thing there. And you need to make sure you've paid all your fortnightly amounts, so which is the 3,000 by the 8th of May to get the APRA payment. And make sure that on the 7 days after the end of the month, you're going to get a form. Well, it's actually going to be in your business portal, and it's going to be available there. And there you're going to have to identify what your actual income was for the month prior and what was your projected income for the month May, say, for example. That's got to be submitted within that time period, and effectively that's not retesting. That is simply just there for the purposes of gathering information for COVID-19 and what the effects to the economy is. Well, that's according to the ATO anyway. So I think that's all I had. I think if you go to the next slide. Probably not, there was a question there, but I think that's more for Nick.
Yeah, I can read that. I might just read it out because I'm not sure if everyone can see it. It says, if a redundancy is due to group restructuring, i.e. role is being rolled up into head office for group-wide efficiencies and cost reduction and not a COVID-19 outcome, I think the question is, can you affect that redundancy? There's no prohibition on redundancies at the moment at all. They just need to be genuine redundancies to be defensible. My point earlier was, if you are participating in the JobKeeper scheme, given that there is an alternative, which is stand someone down without pay, I think it's just an obvious argument by an employee that you should have looked at that alternative. It doesn't mean that it's not genuine. Those of you that have had any involvement in the Fair Work Commission will know that it's pretty easy for an employee to bring a claim. They pay their $60 and essentially they're in a conciliation pretty soon. So you just need to be absolutely satisfied that you met that genuine redundancy criteria, which is essentially satisfying yourself that the organisation does not require that role to be performed by anyone, and that's because of changes in the operational requirements of the business. There's also consultation obligations. If you've got someone that's covered by an award or an industrial instrument, you're required to consult with them before the redundancy, and you're required to also look at redeployment. So if you tick those 3 boxes, you can satisfy yourself that it's genuine. But and it's not really tested yet, but I've already seen a few instances where employees have argued, you should have just stood me down. The one response to that, I guess, is a stand down that's affected under the Act does mean that it counts as service for the purpose of the Act. And as a result of that, employees are still accruing entitlements while they are being stood down. So there might be an operational reason why that's not desirable to the organisation. So I guess long way of saying there's nothing preventing you from affecting a redundancy. I just think that there's a potential argument available to employees.
Would it make a difference if the redundancy was done in, say, February before these JobKeeper rules came in?
Yeah, absolutely. Because no one contemplated JobKeeper then.
Yeah.
I guess the only argument, if someone was able to bring that claim within 21 days, which is the relevant statutory timeframe for bringing an unfair dismissal claim, the argument might be, I'm aware that JobKeeper came in, you can actually re-engage me. You know, JobKeeper contemplates the re-engagement of employees who were made redundant, and they can become eligible. But they do, I guess to answer that question on the fly, they need to have been employed on the 1st of March, actually, for that re-engagement to work. So that's not really applicable.
Yeah, okay, yeah, no, good point.
Yep.
Because from a restructuring point of view, the normal reaction is to restructure people as you don't need them. Looking at things like Virgin, there is obviously going to be a change in that business, but what they have done is to proceed with an agreed stand down in conjunction with the unions to work through a rationalisation of their workforce, because obviously Virgin's unlikely to come back exactly as it was straight away, so they're not going to need as many people. And I think same with a lot of these hospitality businesses, there will be a rationalisation of roles and how they spread it out, and then there will be obviously probably some redundancies out of that, but the ideology, I think, is to try and, same as we have smoothed the curve here, is JobKeeper allows a smoothing of the curve, so you don't have people, a lot of people hitting into unemployment straight away and really creating chaos, further chaos into the economy than what we had already.
Yeah, the ATO and the government doesn't want sent lines out the front of Centrelink, people trying to access JobSeeker, which is partly why they brought this in, just to preserve the status quo. If you can't afford your employees, just stand them down, we'll pay them. And yes, there will be, businesses will look at this as an opportunity to restructure. Some that probably were contemplating restructure before COVID-19, others that need to in response to COVID-19. So, nothing's preventing or putting any handbrakes on restructuring happening now, but
except cost.
Except cost. That's right. And the only relief available in relation to cost is for a redundancy payment. It's the only entitlement you can ever seek any relief. And you're required to go to the Fair Work Commission and ask them, make an application and ask them to make an order that you don't have to pay someone redundancy pay or pay less than you would be required to. And there's already been a couple of those cases, and employers have been knocked back because the commission's looked at their financial records and said, you've got the money in the bank, you can pay it. So I wouldn't be assuming that you'll get one of those orders from the commission.
I would have thought they're rare. And Mira has another query, which is redundancy we're talking about or addressing is where a company has not had a decline in turnover and thus the company is not eligible for JobKeeper.
That removes the argument around please stand me down as a JobKeeper payment, as a JobKeeper employee, because you can always stand down employees outside of JobKeeper if you're not JobKeeper eligible, which means you're not required to pay them, but you won't get the JobKeeper payment. So I think you're in safer territory to affect a redundancy.
Yep. Okay. We have any other questions or queries? I think there's, as you can tell from the content today, it's still developing and it's gradually moving towards sort of clarity. Now that there's service trust issues is sort of coming through and all of these issues that people have been raising, all of it the ATO is trying to respond to. And Mariana, you're getting responses in a couple of days really from the ATO, which is record breaking compared to their normal. We might respond to we might respond to you in 28 days, and then if you ask again in 28 days, we'll send you a letter and tell you that we'll come back to you in 28 days. Was that the normal previously?
Oh, look, you probably wouldn't get a response from them unless you were, there is a team that you can contact when there's something critical for, sort of before you do a private ruling. But again, I think they've been fantastic. I think I've got to say, and we don't say that very often about the ATO, but they've been very good and cooperative. Whether, what they say, the other question is, can you stand on it? I think you can, but if you don't apply, if you don't apply what they've answered, I mean, it's only your question. So it's not binding in any way.
And I think there's been integration of the ATO. We've certainly lost a few of our good staff to them as well. So they have a lot of people who are used to operating in a more advisory-based sort of client focused rather than the older school guys who just go through the Tax Act and adhere with what the ATO viewpoint from an external party is. So that they do have a mix of people who can adapt to this sort of thing.
Yeah, they do have some good quality people there. Yeah. I agree. But, look, I think they have been answering our questions, and we had a whole list of questions. Imagine all the clients have different scenarios. So I'm doing a not-for-profit tomorrow. So if you're a not-for-profit on this line, you might want to join in tomorrow.
Okay. 5 minutes early, unless there's any more questions, I'll call it a day and thank everybody for coming along. Tanya's just flashed up if you'd like somebody to give you a call to talk about any of those issues separately, and we'll arrange that. Otherwise, there's not-for-profit tomorrow, and Friday is our HB community update for all of the accountants and whatever else. So we'll be in touch. See you again next week. I assume Marianne will have another update for us then, and hopefully we're all progressing towards 10 days out from the first payment run from the government on the 11th of, or that 11th of May?
14th.
14th now.
Yeah, up to the 14th. So it may not be the 11th. Where'd you get 11th?
Oh, the 11th was the first document I saw that they released, that this is when it's going to be, which is 10 business days, I think, or 7 business days after the end of the month, because they wanted you to pay up front. So they expected they've got to cash you up.
Yeah, I thought it was on a, they can pay you within the fortnight. So a fortnight. So that's hence why we get the 14th.
Yeah.
But you're better off being over conservative.
Oh yeah, but the banks are stepping in as well now and helping fund those ones they want to. So there is some capacity to do that. Okay. Thanks all.
Thank you for joining.
Appreciate it. Bye.
Bye all.